What if everything you thought you knew about trading could be transformed by uncovering one simple truth? Today, you'll hear directly from the Godfather of Fibonacci Trading, Joe DiNapoli himself, as he reviews what truly separates consistently profitable traders from those that struggle, offering you a clear path to trade with confidence and clarity. In this exclusive session from DiNapoli Day in Poland, Joe will demonstrate why his groundbreaking methods have not only stood the test of time, but continue to be the ultimate tool for navigating the markets even after decades of proven success. I'm Joseph Luxado, and I'm excited to welcome you to the world of DiNapoli leading indicators.
We were just talking a second ago. My life's taken a change for the worse for the last 2 months because of 2 hurricanes that hit us. And it's amazing how fast life can change. You think everything's okay and you go along normally, and in an instant, life can change. So what I want to talk about tonight, what I want to share with the group is this thing called risk analysis. And the important thing that I really look, when I've been trading 55 years, okay? I mean, it's a long, long time. And as traders, we primarily use technical analysis, which is a good thing. And technical analysis, you get the open, high, low, close, you've got volume. And with these parameters, we come up with technical indicators. We think DiNapoli Levels is the best. I mean, frankly, if there was something better, I'd be using it, and I can't find anything better. I can't find anything as good. But there's an element that you leave out. And as you gain an experience, 5, 10 years, 20 years, the element is size. And basically what that means is risk control. How much of your portfolio do you risk, and what is the context of the trade, and how does that affect your risk? So, you guys know I've been hit with a disaster here, and in terms of a hurricane, and I thought this would frame the discussion about risk and risk analysis, because the one thing I really want you all to take away from what we're going to talk about today is the fact that what we really do when we're trading is we are involved in risk analysis. It's a risk analysis game. For example, when you come down to a strong confluence level, you come on down. If you're short, your risk increases as you come down. As you're long, your risk increases as you go up to an XOP. So that's the simple part of risk analysis, and you have to assess it. When you're on very strong support and you're long a given stock or a future, your risk profile is relatively low, but the higher you get up to the COP, the OP, the XOP, then your risk factor goes up, and it's a pretty good idea to start lightening up on your risk profile. So let's talk a little bit about what I've been through, and then I'm going to talk about how you apply risk analysis directly to the markets. 2 months ago, Hurricane Helene struck the island I live on. It's a 100-year event. For some reason, where I live, hurricanes keep missing it for 100 years. They just didn't hit this area. They got close, but they didn't hit. This was a big hurricane, and it came in, and it got close. And it hit us. This is what my island normally looks like. It's quite beautiful here. It's a resort, and this is what it looked like after the hurricane. The entire island went underwater. I mean, imagine this, right? You live on an island. It's not a small island. It's a pretty big island. The whole goddamn thing went underwater. And of course, I have a home here, and I live here. And the night that this thing struck, I was in the bedroom. We had just finished dinner, and I was lying down. I usually take a nap and then get up and do my market analysis or whatever for the evening. And Patty, most of you know who Patty is. She's been with me 45 years or more, and she does all the back office work for Coast. Patty came into the bedroom and she said, "Joe, there's water coming up on the street just in front of us." And she said, there's a guy out there and he's waist high in water and the water's coming straight for us. Well, I was surprised because the hurricane had actually gone past us, but the swirling of the winds had pushed the water up onto the island. Like I said, in 100 years, this hasn't happened, right? So I had not organized sandbags. In fact, we have no insurance on the house, and because the insurance here is ridiculous. And I felt that a 100-year event, it's not, for some reason, the weather patterns or whatever, I'm pretty safe. Well, I went out and I looked at the water coming in, and I had already configured our property so that the water comes in, the water goes out, doesn't touch the house. Well, the water came in, and it got about 6 inches high in the driveway, and I opened up the garage door, which is ground level, and I saw that a little water was getting in, but not much. And I figured, well, okay, I'm going to go outside and try to stop this disaster. I didn't anticipate that it was going to get much worse. So I ran downstairs, and we didn't have any sandbags or anything, but there were palm fronds that had been blown from the trees. And I tried to place the palm fronds in front of the garage doors because we have incredibly valuable classic cars, but they're not just valuable. I mean, there's something that we love, something that I spend my time working on. So I took these palm fronds and I stuck them in the bottom of the garage door. And since there was water trying to get through, it held them there. I grabbed all I could. Now the water was almost up to my knees. And I was going, this is getting serious. The next thing I know, there's a trash can floating by, a big, huge trash can. So I went out and I ran and I grabbed the trash can, which was floating by, and I threw it over an embankment, which was higher. And I figured, well, okay, we're going to be all right, maybe. And our truck, which was parked outside, it's an old truck. We like it. This was getting hit by the water, and the water's coming up more and more. So I don't know what's going on with Patty. So I ran back in the house and looked down in the garage, and I could see that the water was coming into the garage, and it was coming in at a fairly good clip. We had just remodeled one of the downstairs rooms. In fact, the whole house was remodeled. It took 15 years. We do a lot of the work ourselves because I like working with my hands, and it's very hard to get high quality help here. So I went downstairs, and there was a room down there. Water was coming into the garage, and there was a room down there which we had organized for YouTube studios. I had 4 acrylic panels to put up on the ceiling, and the room was going to be completely finished. Had a beautiful bar. It had many pieces of furniture from my mother's estate, and it was a gorgeous room. So we had to keep the water from coming into that room. So what we did was we tried to get wood and some kind of a barrier in front of glass partitions and glass doors, and no matter what we put there, the water kept rising. And when we went inside the room, we could actually see the water from the windows coming up. And it was coming up fast. And inside the room, the water was just very low, 1 or 2 inches. But outside the room, the water was quite high. So I'm thinking, well, if it's this bad here, the garage must be terrible. So I went running around to the garage from that room we had just remodeled. And I tried to open the garage door, and I couldn't open the door, the regular door like you have for opening a room from the garage into the house. I couldn't open the door. I thought it was locked. Well, Patty was on the other side, and I said, unlock the door. And she says, it's not locked. She says, this place is filling up. The garage is filling with water. And the water where I was standing was only about halfway up to my knees, but she said it was filling up. So I'm pulling and pulling on the door, and I realized the door wasn't actually locked. The pressure from the water was against the latch, and it was preventing me from turning the latch. The next thing I knew, the whole bottom of the door crashed open. I mean, the bottom of the door just flopped up. and all this water rushed into the house. I'm thinking, Jesus, this is not good. And I said, look, we have got to protect the studio that we just built. And it was the seminar room for doing private seminars. So I got the door open, all the water rushes in, Patty rushes in with it, and we went charging back to the back room. And we get into the back room. Now the back room is filling up with water. There's about a foot of water in the back room where the studio was. And then as we look outside the glass partitions, the water is coming up so high that it is higher outside than inside. I'm seeing a foot of water pressing up against the door. And she and I are in there trying to keep the water from entering this bottom door. So the next thing I see is the freezer and the refrigerator in the trading room, in this place we built. They both start floating and flying around and pulling the cords out of the walls. And the next thing we feel is that we feel electricity against our feet and our and our knees. I mean, it's tickling us because the electricity was still on and the plugs were submerged. So we're being tickled by the electricity. The water is higher, considerably higher outside than it is inside. And I said, look, we got to get out of here. This is not cool. And so we went to open the door to that room. We couldn't open the door. I mean, the water was higher outside. We could not open the door. Now, I'm not as strong as I was when I was 25, but I still have some strength. And I would get the door open about an inch and a half, would go close again. And, of course, the electricity is tickling our legs. And Patty looked at me, and without any sense of panic, she looked at me and she said, "Are we going to drown?" I said, no. I said, "We're not going to drown. We're going to let the water equalize." And of course, I didn't know if the water would equalize because I didn't know how fast the water was coming in from the outside and how fast it would get through the doors. So we went a little bit further. The lights went out. Now we're in total darkness. The room is filling up with water. We can't get out because the water is pushing against the doors. Eventually, the water started to equalize, and with both of us pushing against the door, we managed to push out against the door, open the door. The water just came pouring into that room, and we went up the stairs and went to the next level of the floor of the house. So I don't even want to tell you what happened to the cars. I mean, this is a car we had for 40 years. And it's Patty's car. And I have put every nut, bolt, washer, everything you can think of. I mean, the car was done absolutely beautifully. This is my car. I've had this car for over 60 years. I had just got it running. It had new everything. I mean, you just name a part, it's new, right? The motor had been completely rebuilt from a guy I know in California. It was special. Everything was special about it, expensive and special. And we're not going to get into what happened to the cars. It's not pretty. Will I be able to bring them back? Yes, I think I will, because I'm pretty good with old cars. But it is a tragic loss for us. I mean, it's actually worse than what happened to the house. Now, some of you may know what this is. This is a piece of exhaust pipe, actually a header pipe. And this is what they look like when they're new. 30 hours after the storm subsided and the water drained out, 30 hours. And this is what that pipe, or a pipe like that, looked like. It absolutely amazed me, the incredible destruction of salt water. I mean, I've seen salt water attack metal before, but this is, I mean, we're talking 30 hours. And if that happened to this pipe, you can imagine what happened to cars. If that wasn't bad enough, 10 days after this hurricane, we were hit with a second hurricane. A very powerful storm, Category 5 at its peak. Now, I want you to think about something. I'm coming to my point here. I don't want to waste your time. I know you're traders, but risk analysis is where we're coming from. And I want to make this idea of risk analysis clear, and it will become more clear as we go on. But, we had 100 years misses, or we just didn't get hit by these storms, right? And in 2 years, we had 3 hurricanes. The first one was not bad. It missed us. It didn't do much damage, but the next 2 happened within 10 days of each other. So, you can say shit happens. Well, it's a little bit more than that, because what we have to do, whether we're trying to navigate through life or whether we're trying to navigate through the markets, is we have to make an analysis of our risk. And I have 2 questions. I don't want an answer. I mean, we'll have some time for questions and answers later, but I want you to think about this. And the first question is, was my risk control adequate for the hurricanes? Now, we're not talking about the markets. Was my risk control adequate given everything I knew up to that point? We can't go back in time. We don't have the benefit of hindsight. And so at the time, was my risk control adequate? Did I screw up? Or was what I did with my preparations, which were very little, was that reasonable? Question number 2, what do you think my risk control is going to be during the next hurricane season, which is going to start next July 2025? Those are the 2 questions I want you to think about. All right, now we're going to start talking about markets, and I'm going to reiterate something I said earlier. We got open, close, high, low, volume, and we have to add to that. If we're going to be professional traders, we need to add to that. We need to add risk analysis to that. We're going to go all the way back to 1969, 1970, and we're going to look at the Dow. Now, my chart's a little bit small here. I can't read the numbers exactly, but I know just from memory, there were around 1,000 on the Dow at this point in time. And we dropped in a matter of a few months, 1969 to 1970, down around 600, 650. That was a very significant loss. Now, I was in my early 20s at the time, and in my accounts, I was running 70 to 90% margin. Now, that is insane, but I didn't know any better. By 70 to 90% margin, it means that I was putting up 30% to 10%, and I was borrowing the rest. There's a loophole. I was working for one of the offense companies. I won't say which one, but I was working with them. I was working for them at the time, fresh out of college. And there was a loophole. You could take advantage of the credit union and borrow a hell of a lot. You could get the kind of margin I'm talking about, 70 to 90%. So it took me 2 years. I only had $600 when I started. It took me 2 years to build that up. Between 1967, when I got out of college, and 1969, I was up to 30 grand. During this break I just showed you in the markets here, this break here, right here, okay, where the Dow dropped like that, all right, my account in 2 days went from 30,000 to 50,000. 50% drawdown. I got out. I managed to save that 15,000, but it was like a scar. It was similar to this hurricane. In other words, I felt what could happen. And a number of my engineers, I was an engineer at the time working at this offense company. And what happened was I was so good at the markets that the lead guy kind of allowed me not to work very hard teaching people defense or offense systems. I basically was put in a corner and helped them all to trade. That's what I was doing. So a lot of these guys, they didn't get out like I did. When it went, my account went from 30 to 15. These guys stayed in, and they ended up owing the credit union thousands of dollars because their accounts went to zero. They were wiped out, and then we started eating at the margin money, and they were forced to sell, and they ended up with these enormous debts. So this was a very awakening experience. Now, 1973 to 1974 markets. I can't read the numbers, but you can see, I believe the low is somewhere around 550. Just remember that because I can't read the numbers. But I think the high was somewhere around 1100 Dow. Can you imagine 1100 Dow? I mean, it sounds crazy, but that's where it was back then. And this was a very dramatic drawdown. But I had learned my risk profile. I wasn't, hey, no more 70 and 90% margin for this guy. I was trading on some margin on earlier than 73, but very little margin. And when this down market occurred, I was largely out. There was a lot of inflation going on at the time, and I moved my money into hard assets, and it worked out well for me. But what my point is because of the risk profile I developed in 69 to 70, because I realized the shit could hit the fan. Okay, I realized that. Just like I realize now about hurricanes. Okay, I'm no longer safe. Because I realized that I was largely out of this market, which was a good thing, and I got into other stuff. Now we're going to go forward to the NASDAQ 100 around the year 2000, and again, I can't read the numbers, but I believe there was about an 80% drawdown. Now during that drawdown, I remember I lost a little money, but only a little money. Why? Because the risk profile up around the 2000s, the valuations up around the 2000 area told me that my risk profile was high. And when my risk profile is high, I have less exposure. It's size. It has to do with size, not the DiNapoli levels or not some other damn thing, not some other thing, but my risk profile, what I'm willing to risk given the situation had changed. And I learned that all the way back to my experience 69 and 70. So I did take some losses there, but it wasn't bad, not much of anything. All right, now let's go to 1987 when we had a 23% drop in one day. I had predicted that. I had predicted it roughly 6 months in advance at a seminar that this would happen. And when 1987 happened, I was prepared because I knew this was coming, and I didn't lose any money. I didn't go long the market near the bottom, although the parameters told me I should, the DiNapoli level stuff. But it was so scary, I just didn't want any part of it. 2008, let's talk about that. We all know what happened 2007, 2008, financial crisis. And it was absolutely terrific. I mean, for me, that was an absolute moneymaker. Because I applied to DiNapoli levels, I took appropriate risks, and that particular event around the 2008 area was extremely profitable for me. Now, something very, very important happened in March of 2009. Skynet took over. Now, what is Skynet? Well, Skynet is AI. Skynet is these algorithms. Skynet is in some stocks in March, April, May 2009, algorithms were roughly responsible for somewhere in the vicinity of 80 to 90% of the trading volume during the day. So there is a sea change that happened between 2008 and the next event I want to mention, which was 2011. Now, in 2011, there was an additional market drawdown that was significant. Now, I'm going to tell you a little bit about how I run my accounts. This is personal to me. I mean, you do what you want. But what I do is I have my big money is involved in stock accounts. I have some significant money in futures accounts, but not the size that I have in the big accounts. And I primarily, although you can make good money in futures, obviously, in short-term trading, primarily, what I use my futures accounts for is to keep me involved. And so when I come to an important point in a stock, I'm there. I'm actually at the screen. I mean, if I don't have any involvement in futures or short-term trading, I can't just sit there and put a trade on once every 2 weeks on a stock. You actually need to be there because these algos front run you. And so in order to keep me there, in order to keep me interested, I'm trading back and forth in my very high risk futures accounts. And I find it fun, and it keeps me in front of the screen and allows me to be there when the important levels come up on stocks. Okay, 2011 hit, and I did take a hit in 2011 on my most speculative accounts, but I managed to get back. I managed to get all my money back, and everything was okay. All right, now let's go to 2018. Now remember, all this time I got in the back of my mind because of the previous experiences I had, 1987, 1967 to 1969, 1973, 1974. All this stuff is in my mind, right? So I'm aware of what can happen. Unlike the hurricane, I am aware and I am quantifying my size depending upon how the outlook looks for the market. Now, in 2018, there was, if you look at the charts, I don't have a chart for you, but if you look at the charts, there was an absolutely brutal drawdown that happened in 2018. And it happened around February of 2018. And in my high speculative accounts, I took a significant hit. I got hit hard on those, okay? A significant drop. What happened was, and this is extremely important and it's extremely interesting, and this is going to frame the discussion going forward into where we are now. And that is that Skynet, the algos, the AI, all that stuff, what they're doing, okay, is they are actually manipulating the market in a lot of cases, and they're going into the market and they're getting these little pieces. Now, the way a lot of these things are programmed is that if volatility gets too high and gets too far out of range, they shut down. They're gone. Boom, they're out. They're no longer trading. They're gone, and this causes tremendous illiquidity in the market because where they would normally be there, they're not there. And so that's what happened to me in 2018. I got hit, and I got hit significantly. And for ego and other reasons, I just said that this isn't going to happen to me. I am not going to allow this. I'm going to get all my money back. F them, okay? And so for 3 weeks, I stayed at that machine, and I traded some of my best trades. And after the end of 3 weeks, I actually managed to get my money back. And what happened to me after the end of that 3 weeks, where I got actually all my money back, didn't get on the plus side. I got all my money back. I had a health event. That health event has plagued me to this day. Now, in 2018, I was old. I'm older now, obviously. But so maybe that was the reason for the health event. But I think it was the stress brought on. So I won the war. I won the battle and lost the war, basically, because I'm still having effects from that issue now. All right, so now let's go up to 2022. Now, 2022 was not that bad of drawdown in the stock market, so it really doesn't qualify. And what we're going to talk about next is 2025 and on. I'm going to try to give you some idea of what I think is going to happen. Okay. Getting back to Skynet, algos, AI. The way things work in America, and probably a lot of places around the world, but I know America better than anything else because I live here. Okay, is Congress? The government is not for the people at all. What they are for bribes. That's how things work. And basically, bribes are disguised as campaign contributions and other such events, money laundering situations that are legal or they're not prosecuted because everybody in Washington benefits from this. Also, the agencies. I'm not going to name the agencies, but you can pretty much figure out who they are. And what happened? This is a pre 2009. March of 2009, we had a lot of traders trading on the 5-minute area and on the 30-minute area, and it gave the market a stability so that your higher time frame trades were stable. That's not the way it is anymore. Because of these bribes and because of the rules, the AI, the market algos, etc., Now, they're any smarter than us, but they have advantages. They have been given advantages in certain order entry techniques and certain rules that are formulated by the regulators. And again, I'm not going to mention who they are because I don't want my ass to get sued. But anyway, the net result of this is that you have I got to be careful of my language. You have reduced the number of short-term traders to the extent that the market can be more easily manipulated. This causes illiquidity because when the market gets highly volatile, you can push through these levels and there ain't no coming back because there isn't any traders there. And there's no traders there because the friggin' system is totally unfair. It is, but we have to live with the way it is. It doesn't mean you can't make money. It just means that you have to be aware of this situation. Keep that in mind. Now, what this slide's saying is that my risk profile, how I handle risk in the markets and how I will handle risk regarding hurricanes is going to be different because of my experience. Let's take a look at 2021 when Biden took office as the 46th president of the United States in what I believe to be the most corrupt election of my lifetime. He was known in 36 years of his service in the Senate as the stupidest person in Congress, and he was. I mean, I heard him back then. I heard his speeches. This guy was out to lunch. A 12-year-old would have done better in the Senate than him, but that's not the point. The point is that even when at vice president, for 8 years, Barack Obama said there's no way we can believe the number of ways that Joe Biden can F up. I mean, that's what Barack Obama said. So when he was elected president, my risk profile went through the roof. I'm going, oh my God, they elected the stupidest guy in Congress. And this guy doesn't know, his what's from his elbow. He doesn't know anything, right? And his cabinet and the people around him were warmongers, their corporate interests, woke ideology. I mean, a corrupt mafia boss was not as was more idealistic than this guy. And so I assumed that the shit would hit the fan, that the markets would come down because this guy's just not competent. All right, so my assumption, and if you go back to any of the podcasts I did at the time, around 2021, 2022, I assumed that that his presidency would be an absolute disaster because he doesn't know what he's doing. All right, so what happened immediately? We had Afghanistan, we had Ukraine, now we have Israel. America's supporting a genocide. We've got China, problems with China, where we're trying to push them into war by talking about Taiwan, which we agreed is theirs. And our military is being laughed at and disrespected. The face of our military is right down there, Admiral Rachel Levine. Now, can you imagine? I mean, think about this. You're a young guy, 18, 19 years old, full of testosterone. You want to get involved in the U.S. Army and be tough guys. And this is who you see as Rachel Levine. I mean, they wonder why they're having problems recruiting people. I don't wonder. All right, so I figured back when he was elected that our cities would become war zones, and they have been. If you know anything about American cities, I mean, I wouldn't go into them anymore. They're done. I'm done with them. Rampant crime. We have an unprotected border. We had uncontrolled inflation. I mean, the inflation numbers that you guys see or that are quoted, they're absolute BS. We have had in the 3.5, 4 years under Biden, we had about 30% inflation. Absolutely, and that is conservative. Lawfare. We're using law to prosecute political rivals. I mean, this is what they've been doing to Trump for the last 2.5, 3 years. They're using every excuse to bankrupt him. That's what they do to individuals. They put people in jail. I mean, I could name them. Navarro's gone to jail. Others have gone to jail, and they've gone to jail for this All right, I predicted this, okay? And this is what's happened. Extreme distrust in government, a deeply divided country. I mean, this shit is hitting the fan. Uncontrolled government spending. I did not predict child sexual mutilation, but that's going on in the United States and has been for the last 3.5 years. Now, I predicted most of this stuff, and I was 100% right. I was 100% right about the fundamentals. My risk analysis went to between 70 and 80% T-bills. Now, what that means is T-bills went up to the point where we're getting somewhere between 4 and 5%, even as high as 5.5%. And because of all the things I cited, because I felt the market was going to go down, I decided that most of my money was going to go into T-bills. Any long trades I would have would be hedged against resistance, and when I had a pullback, I would close my shorts, and they would be hedged against support. So let's take a look what happened. A few months after Biden was elected, the market agreed with me and had a very, very sharp downturn. Now, you can see where the MACD broke, very near MACD predictor broke. This is a monthly chart. And what happened was the market came down very sharply. So I was basically right, and I felt the market was going to have some kind of a bounce down. I'll show you where exactly down here. And that would give me a chance to close the shorts I had on. Now, remember, I'm only trading with 20 to 30% of my money. The rest of it is safely in T-bills because I don't know how far this thing's going to go. I mean, I'm worried. I'm scared. Okay, I see the hurricane coming, and I have enough experience that I'm going to be very cautious. So what happened was the market did break, and this is around, I think, October of 2022, and we came into this huge support area. This is in the NASDAQ, and you can see the confluence area that appeared down here. Now, normally when you get a high amount of thrust, and we call that the bread and butter, you can define it by the 3x3. You get a high amount of thrust, you will come down to massive support, and you'll get a bounce to the 0.618. And that 0.618 becomes a fulcrum. Anyway, we had a very strong support down here in the NASDAQ. And what I did there is I went long. I started going long, but again, only with 20 or 30% of my money, because I don't know what's going to happen, and I'm very worried about the future of the world. If you look at a short-term chart, here's that same confluence area, and we supported right on it beautifully. If you look at the Dow, the monthly S&P futures, we got an ABC, XOP right down here at the bottom. Now, this is what you look for in a situation where you have a bread and butter. You come down to big support and see the 0.618. I don't know if you can see my cursor, but you can clearly see the 0.618. This is where I was going to eliminate I was going to eliminate the long positions I had accumulated further down, and I was going to go somewhat short, not heavily short, somewhat short. All right. So what happened? There's your bread and butter. We got thrust up. There's the breakdown. There's the October low, and we come back up here to 0.618 resistance. Now, if you look at the NASDAQ quarterly, what happened is exactly that. You come up, you pull back to the October low, and you go up to 0.618 resistance. Now, this becomes a fulcrum. When you're above that 0.618 resistance, hey, the market's saying we might be going up. You're below it, the market is, and it should be going down. So what we should have experienced here was an A, B, C, COP, OP, XOP. And that's what I expected. So what happened was when we get up to this position, I got out of my long positions and still retained a few shorts. If you look at the S&P, basically the same thing happened. Breakdown, support on the October 22nd low, and now we're exceeding the 0.618. We shouldn't be exceeding the 0.618 on a quarterly chart. I mean, something's wrong here. Why is this happening? All right, now let's look at the next one. There's the S&P futures. We just exceeded the 0.618. We come back to this 0.618 on a revisit, and then we go higher. As we stayed above the fulcrum, I'm realizing my short positions aren't working. I either have to hedge them or I have to get out of the short positions. Because even though I think that because of all the reasons I cited before, military, all the reasons in our cities, the open borders, the idiot that's in control, even though I realized that all this was happening and I was negative, I was super negative of the market. The technical indicator, the exceeding the 0.618 told me I couldn't stay short. This is a critical point. I want to get to you. I want you to understand, because fundamentally I was 100% right. I was 110% right. The United States was going to shit. All right. But the market didn't care. The market wanted to go up above that 0.618 and wanted to continue up. I can't argue with the market. No matter, I'm right the fundamentals, I'm wrong the market. So what happened? Let's take a look. Here's the 0.618. We did a revisit of the 0.618, which is normal. The market goes straight up despite everything that I have correctly predicted. All right, all the fundamentals that I have correctly predicted. Aside from that, the market's not agreeing with me and it's going up. So what's my point? My point is that you can be completely wrong the market, and if you got good technical indicators, you're going to make money. I was right the fundamentals, I was wrong the market, and I made money. Why did I make money? I made money because my T-bills, where I had 75, 80% of my money, sometimes 90% of my money in T-bills, they were just chugging away and giving me money. I also kept out of dangerous trades. I wasn't getting short unless the only shorts I held were hedge shorts. I had hedges on with other long positions during this move up. If you have good technical analysis and you follow what you're doing, you'll be able to make money when you are wrong. That is a key point I want you to understand. Just read this slide because it is key to what I'm trying to explain to you today. Okay, now let's talk about the future. Based on my experience in hurricanes, I'm going to be one hell of careful in the next hurricane season. I'm going to get my cars off the island, assuming they're running. I'm going to get my body off the island. I'm going to secure the place because my experience has told me that it is freaking dangerous to be here. The disaster can happen. Well, I've seen many disasters in the markets. Many. I went through half a dozen of them for you, going all the way back to 1969. And what I'm trying to tell you is that a disaster can happen in the markets, and the disaster can be worse than what's happened before because of the illiquidity fostered by the development of AI and the development of algorithms and the rules. I mean, I could spend 3 hours going through rules that these guys benefit from that have been instituted by, this stuff that have been instituted that give them the advantage. All right. Now, remember, a lot of these guys, when the volatility gets high, they say bye-bye, and they ain't going to be there. So what about the future? Trump is in. He has a team. He has some incredible team players here. JFK, VVAC, J.D. Vance, and several others. He's also got a lot of warmongers in his cabinet, so I don't know what's going to happen there. I have some faith that Trump's going to want to do the right thing and that he may do the right thing. I think Ukraine is going to end. However, I want to talk to you about other power centers in America. They are out to sabotage him. They are out to destroy him. They have been out to destroy him for years. And what's happened to them is that they have lost power, or they are losing power, and they don't like it. I want to talk to you in just a minute about power. But right now, I want to tell you what I'm doing. Since Biden was elected, I'm 78% essentially in cash. Okay? Now Trump is going to be in office. Does that make me happy? Does that make me stop worrying? Does that change my risk profile? It makes me happy because I think there's a reasonable chance that America and the world is going to come out of this catastrophe that we're currently in. I mean, World War III is around the corner as far as I'm concerned. And I was 16 or so when the Cuban Missile Crisis occurred. So I'm not new to this. I'm concerned that these folks are out to ruin Trump. Trump has connected the action of the stock market as a way of evaluating his presidency. And this was a mistake on his part. He should never have done that, because with the illiquidity situation, you get $1 billion or so, you can push this market all over the place. And one way to get Trump would be to have this market go into a free fall, and that could be instigated by a bond market free fall in the United States. So my risk profile when Biden was elected was extreme, and my risk profile after Trump is elected, which is now, is still extreme, because these people that want to destroy America and want wars all over the world, these suckers are still in control. They still have a lot of control, and they're going to do everything they can to ruin the Trump presidency. And they just might be successful. You can't short sell these guys. They've got billions upon billions from the money laundering in Ukraine and during other wars, and they are a force to be reckoned with. It's more than money. It's more than money. And I want to close by explaining something to those of you that may not be aware of this. I want to talk to you a little bit about power. You see, the people in control in Washington, D.C., they got all the money in the world. They can buy all the hookers. They can buy all the cocaine. They can fly everywhere in their private jets. They can buy islands. That's all money. There's another thing that you are probably not aware of that I only became aware of 10 or 12 years ago. And that's this thing called power. In around 1987, 88, 89, I met a Frenchman, and he was in very high-level politics. And he was a great guy. I learned a lot from him. And when we would sit down and have a few drinks, he'd start talking to me about the aphrodisiac of power. And what the hell are you talking about, the aphrodisiac of power? What do you mean? He would sit there and he would try to explain to me what it was like to have power over people. And frankly, I couldn't really understand. It's like trying to explain sex to somebody that's never had sex. You're not going to be able to do it, right? Good sex. All right. So it gets to be about 15 years ago, and I'm not going to give you the details of my experiences, but I'll just give you a few. I'm not going to tell you where these experiences happen, but I started to experience power. When I go to an airport, I arrive at the airport, there's an entourage, okay? There's a shitload of people there to meet me. There's models with bouquets of flowers. There's outside the airport, there's limousines, and there's more cars in front of the limousines and behind the limousines. And when I get into the limousine, I've got this beautiful model sitting next to me. I'm being fed caviar and vodka and God knows what else. When I go to these presentations, there's thousands of, it's sick. What it does to you is sick. Human beings can't handle power. So my reaction was, I forgot to tell you, there were certain meetings I went to where people would get up and praise you, okay? You're this terrific, you're that terrific, you did this for me, you did that for me, and one after the other, and the subsequent people have to up the praise, praise you more than the previous people. After 30 people, you're sitting there going, my God, this is sick. Now, I don't want to criticize any particular culture. What I'm trying to tell you is that power affects people, and it affects people in a very negative way. Sure, I like to be appreciated, but This power thing, you know, we're subject to it. If you haven't experienced it, just like you haven't experienced sex, hard to explain. These people that are in control in Washington, D.C., they are used to power. They do not want to give it up, and they will sell they've already sold their soul, but they'll sell your soul for you in order to keep their power. Bottom line is, I am very worried about the future under Trump. I'm hopeful. Yeah, I'm hopeful, but I'm worried. And I will watch the markets. I will look for technical indicators. I will look for breaks of important support areas. I will sell on revisits back. But if those sells don't work, I'm gone. I will get out, because I'm really worried about the future, and that's where I stand. And Pio, that's it. If there's questions, I'm more than happy to get into some questions if there are any questions. I hope you all were able to understand what I'm trying to talk to you about today.
Yeah, highly appreciated, Joe, especially about all the insights and your feelings and what you have described to us. Happy to hear you, and yeah, thank you very much for a good time together. If there are any questions, I certainly would like to put them, and I can translate, or you can ask Joe directly. Of course, we have people watching us on the YouTube channel. They probably, I think, cannot place answers or questions, excuse me, but certainly they can rewatch it later. Also there. Any questions, guys?
Don't be shy. I don't bite. I'm happy to answer a question, you know, to the best of my ability, if I'm able to, give you any insights. That risk control. That's what this presentation's about. And I told you how I feel. I told you what I'm going to be doing, you know, in the future. I'm very cautious and very careful. Remember those market drawdowns I showed you. Remember the fact that I had not been hit here with a hurricane in 100 years. Okay. And I was hit hard. And then I was hit again 10 days later. Look, if it's taken you 50 years or 55 years to accumulate a couple of $100,000 or $1 million, it can be gone like that. So be careful. Be very, very careful. Don't be shy. Any questions? I'm here.
The rumors, you have got everybody frightened.
They should be frightened. They should be frightened.
Second, John.
Rok temu strasznie straszył nas Joe, że tu Carrefour coś tam i tak dalej. 2 lata temu to samo i to jest na historycznym szczycie.
I
właśnie nie patrzymy. Może on jest, wie, trzeba robić odwrotnie niż doradzi.
A year ago, you were saying that the market is probably also on a shortly free fall. There is a big risk. 2 years ago, we have heard same. Yeah, and the market is at new highs and moving forward and making a lot of stocks making triple or double digits percentage point moves. So, well, is it really just to follow that cautious stance in the way you have described today and a year or 2 years ago? It's a question.
Yeah, I have been wrong the market. I've been wrong the market for, I would say, 1 year and 3/4 to 2 years. And here's the point. I made money. I didn't make as much money as I would have if I was right the market, but I still made money. I didn't lose money because I followed high quality technical analysis. Now, the question is, did I assess risk incorrectly? I believe the answer is no. I did not. I had my risk assessment was right. Now the market didn't follow through. Why didn't the market follow through? This is quite interesting. Those people that are in control in America and in other places in the world, they wouldn't have been able to do what they did if this market had fallen apart. The market was held up by government spending, primarily in government borrowing to a large degree. And remember, it's much easier to manipulate the market now than it was years ago because of the advent of AI. Now, maybe you don't care about any of that. Maybe all you do is you look at the market and you go, oh, well, it's going up. I want to be long. Okay, that's the way I was in 1969. Market's going up. I want to be long. And I was long, and I lost 50% of my account 2 freaking days. So I think it's appropriate to have adequate risk analysis. There's one other thing I want to mention to you. And this is, again, it's fascinating. At least I find it fascinating. In February of 2020, COVID was coming into our world, right? February 2020, my ass is in Bangkok. I'm sitting in Bangkok, and I'm seeing what's happening in China. And I've got a lot of contacts in China. And so I'm talking to these people in China, and they're going, hey, this is bad. People are falling over on the streets. Bad, bad, bad. And I'm thinking, okay, the economy's going to go to hell. It's all going to go bad. And I get significantly short the market. All right. So what happens? Well, market comes down a little bit and then goes right back up again. The COVID thing's happening. I mean, it's happening. And this was 2020. Now, remember, now Skynet's in control. Different situation than in the past. The market goes up. I go, okay, I'm wrong. The market's against me. I'm wrong. I'm getting out. I get out. And then in March, approximately March or April of 2020, the market absolutely crashed. I mean, absolutely crashed, right? So instead of the market being a predictor, as it was when I was a young man, the market is acting and behaving in ways that don't mirror what it did in the past. And I think this has to do with AI. So I don't know if you want to take the same risk under today's situation. Well, you're certainly welcome to, but I'm not at my age. No way, because I'm not going to be able to make the money back if I blow a whole big chunk of it.
Thank you, Joe. There are some questions. Sorry, on YouTube. Maybe I read it for you. What's a good point entry for gold and Bitcoin? What's a good entry point for gold and Bitcoin?
About 2 weeks, not 2 weeks, about a month, maybe 6 weeks, 5 weeks ago, I sold, still have a little Bitcoin, but I sold my gold mining stocks. I have some physical gold. I'm looking for a re-entry to the long, and mostly gold and something like Bitcoin. I'm very positive on for the long term. The manipulators and the people that want to control our lives, they don't want gold and they don't want Bitcoin to succeed, particularly gold and silver. I still have a long position in silver. I didn't get out of it. Nice profits as well. Aside from gold, silver, Bitcoin, I want to have some core hard stuff, palladium, platinum, some hard stuff in case the shit absolutely hits the fan, inflation goes up again to say 10, 12, 14%. Any other questions, Pio?
What do you think about XAO? So it's called, yeah, XAO, and DXY.
I have no idea what that is.
Okay, well, these are tickers. So probably that's meant about gold. It's gold. Yeah, the index can be maybe dollar index. Yeah.
I have no comment on the dollar index. I mean, we go out there and steal Russia's $300 billion in the dollar. The dollar manages to survive. Here again, I think it's a crapshoot. I can't be bullish the dollar, nor am I bearish. I would look at the technical indicators, see where the MACD is on long-term charts, And that's how I would play that.
Okay, there is. Yeah, some comments on NVIDIA and artificial intelligence generally, and NVIDIA by itself.
Okay, I'm not sure. Did I hear a question there, Piotr?
Yeah, some comments about NVIDIA general, and AI general. I mean, as a status and for the market.
Okay, are you saying you want some comments about AI?
Yeah, and NVIDIA, the company, the stock.
NVIDIA. Pardon me. There's an echo here. So it's NVIDIA is against resistance at 136, 137. That's why we had the pullback. It's against resistance. We're in a tech bubble. We have been for some time. Bubble can continue. I wouldn't touch it on the long side for anything, unless I'll touch it on a really nice pullback at an XOP and get long for a little bit. But I'm not getting married to anything in here, and I'll let someone else take the risk. It's not for me, and I don't mind. I'm making money anyway. I'm just making money more safely.
Okay. From the audience, how old was your Mustang, yellow Mustang? What was the age? What was the time of production?
The Mustang is a 1966 fastback, very rare car, and a very beautiful car. And the other car, the car that I use, I actually got 25 miles on it after the rebuild, after everything was done on my car. I got 25 miles on it before the storm hit. So I guess it's a good thing. At least I was able to drive it again after 60 years. I don't think I answered the question properly on AI. The question that you asked before was about AI, and it wasn't AI related to the markets. It was, I think the question had to do with what do I think about AI as far as investing in it. And as far as I'm concerned, it's too high. Look, I've often said in presentations that trading is what we're doing in trading is juggling dynamite. Juggling dynamite. And as a long-term 55-year dynamite juggler, when the fuse is lit, I want to step away. And the fuse is lit on a lot of this stuff. And I'll let someone else take the risk. I am happy and very willing to get significantly short this market if I see the right situation. But what I think may happen is that when this thing starts to come unraveled, you're not going to have a chance to get short. Remember, 23% drop in one day in 1987. And you look at the charts in 2018, see what happened then. I was trading limit down days. I'm not afraid to get long on a limit down day. I was doing that in 2018 and make money on my way back up. But I'm telling you, for me, the risk is too high.
There is some more questions coming, Joe. With all the algos and capital that can manipulate markets intensively, as you mentioned, do DiNapoli levels still work, or technical analysis for that matter?
Well, I was unable to really hear the beginning of the question, but absolutely.
With all the algos and capital that can manipulate the markets intensively, do DiNapoli levels still work, and the technical analysis for that matter?
Yeah, DiNapoli levels definitely still works, but they're harder to apply. You can't just say, okay, I'm going to buy at a 0.618 and buy at a confluence level. You could have done that. Prior to March of 2009, but you need a better understanding of DiNapoli levels now. Revisits, for example, are important. You have to understand patterns, wash and rinse, bread and butter, etc. Double repo. The context affects the DiNapoli levels, as you know. I mean, we can get a support area, we can get a resistance area, but is the market going up or down? That's a critical aspect of of DiNapoli levels. If you break a support level, you have to understand that there's going to be a revisit, most likely, and that's where you would sell the market. So yes, it still works. It still works beautifully, but you have to be a little more sophisticated. You have to know more about how to apply DiNapoli levels.
Well, next question. Do algo pose a risk for all time frames, or only the very short time frame?
Okay, what was the first part of that? There's an echo and it's hard for me to hear.
Do algo pose a risk for all time frames, or only very short term time frame?
This is a great question. Both. And part of the reason is that the market's been hoard out for the short time frames, which gives the ability for manipulation, a higher degree of manipulation. And also, when you've got a lower level of liquidity and these algos can be pulled out of the market, you can get an illiquidity situation. This is what happened in 2018. This is why I got my ass in a lot of trouble in 2018 on my very speculative accounts. And this is why it took me 3 weeks to get back. And of course, if I had to do it again, I'd rather lose the money than my health. But that was what happened then. And yes, they affect all time frames.
And I believe the last one would be a good closing one. Do you have an update to your book to counter to these changes, for these changes? Will you have a...
You mean an update to DiNapoli levels?
Yeah, to address those changes, yeah, about algos. Would you do that?
No. I think the best way to handle that for our clients is to have the client study Trading with DiNapoli Levels. One of the translations, yours certainly was an excellent translation, or the English copy, and have a client study that, and then have a client come to a private seminar rather than to read another book, because the private seminar setting is just far better, because people have questions. They go, well, what about this? What about that? What about the next thing? And you really can't address that properly in a book. So I think it's far better for the client to come to a private seminar once they prove to themselves that the stuff works.
Okay, well, great. These were from YouTube questions on the chat. I believe we have asked them all as well, as far as I see. I think we also have also asked all the questions over here. Oh, highly appreciate it, Joe, that you've been with us and for your insights. And I'm happy again that for the next year we've been all together here for this DiNapoli Day. Appreciate
well,
it.
I really need to thank you all, because I've been dealing with a disaster here, hundreds of thousands of dollars worth of damage and loss, and emotionally it is difficult, primarily because of the cars. But I've been dealing with this shit for 2 months now, and it's just nice to get back around traders and talk trading and get back to who I am. And so I've got to give my sincere thanks to you for going forward with this, and I'm very, very happy to be among the traders there in Poland as well as on YouTube. So thank you.
Thank you, Joe, very much. Appreciate it. Thank you.
Want to take your trading to the next level with DiNapoli Levels? Get started with the free DiNapoli onboarding program. Just click the link in the description below. Keep learning and watch this next video to dive deeper into the world of DiNapoli trading techniques and refine your trading strategy. If you found this content valuable, hit the subscribe button and turn on notifications so that you'll never miss an update on our latest trading insights. Trade smart, stay sharp, and we'll see you in the next video.